In this video, traders, we're going to look at the truth about catching a big trend. Hindsight's great. We can all look at these charts and go, oh, look what we could have done. What about the real world? How can we catch it? How can we stay on it? Stay tuned. Hey guys, warm welcome to you. All right, so catching a big trend is tricky for day traders, right? Because we are conditioned to try to find those extensions, find those levels to work off. Where's the trade going to go? Where's the trade target? Take the trade off. And that generally serves us quite well. If we become efficient at that and proficient at that as well, we're going to make lots more money than if we're just focused on trend days. However, trend days can give us those really big wins if we get hold of them. So we've got to be aware that they do come. They're not very often. You might get them maybe once a month or so, depending on what market you're trading. And obviously, you know, sometimes have flurries where you get lots of them, and then sometimes some kinds of market cycles you don't get many of them. But you know, they're there, and they're a kind of environment where, you know, if you can harness it, it can really kind of boost your P&L for the month. So what are we going to do? So first of all, guys, hindsight's great, but let's look at the clues. So some clues that we can look at to say, hey, this might be a trend day. And that's all we're trying to do. We're going to say, listen, this could be a trend day. If this is a trend day, then I need to change my strategy. Whereas a rotational normal type day, it's like, hey, I'm looking for those pulses, those drives, those kind of moves, and I'm going to grab those and move on to the next trade, the next trade, the next trade. But a trend day is, okay, if I get on it, I need to stay with it. So things like volume, opening drive, good volume on the opening drive, good range on the opening drive, that kind of thing. Maybe if it's a gap as well, perhaps if it aligns itself with a daily time frame. So if it's a breakout on a daily time frame or something, some sort of catalyst with it, a news catalyst, you know, that's indication that this could be a trend day. We don't know yet. We never know till after the fact, but you know, it's something to look at. Pullbacks. You know as well as I do, guys, that when we get a kind of normal day, we kind of push, we pull back. Let's say we have a 10 handle range on the S&P, might pull back 5 or 6, 4, back again, up again. You know, there's a lot more kind of movement up and down. Whereas a trend day, we kind of get kind of big moves and maybe kind of chugs and chugs and chugs and chugs. You might have a shallow pullback at some point, consolidation and go, but you don't kind of get those rotations that we do when we're trading a kind of rotational type day. So watch those. Other markets as well. Are other markets, other indices, other stocks, other currency pairs that are correlated doing the same thing or inversely correlated doing the opposite thing? Are we having some kind of big money shift going on, which would indicate, hey, they've got another tick in the box for a potential trend day? So things with a trend day, guys, if we're starting to recognize it, there's a couple of things we've got to make sure we try and do, and that's that we make sure we stay with it. Because if it is a genuine trend day and we're going to look back on hindsight and go, oh, it was a trend day, it's going to close in the upper 10% or lower 10% of the range. In other words, you know, we're going to chug, 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 have some sort of pullback, and you're going to close near to high. So the idea is we want to hold it until the close if we believe it's a trend day. Of course, we need to still protect our risk. We still need to be aware of, you know, counter trend moves, and we don't want it to kind of do a double take on us, i.e. come down a V-shaped reversal. So we have to have some kind of management, but I think you've got to be more flexible with your stop width. So normally maybe you've got a trading stop on your rotational trade, or maybe you're kind of a bit tight with your stops. Obviously the trend type trade, if you think it's a trending type day, you've got no target. Your target is the close. So all you're trying to do is stay in the trade and give back as little as possible, but still give it room. So if you're trailing a stop, you've got to really be quite generous with your width, in my opinion, and be prepared to give back gains, you know, especially at the start of the day. Now obviously later on in the day and you're up quite a lot, you can afford to tighten up a little bit, but at the beginning of the trade it's going your direction. Maybe you're at 50, 60, 70, 80, 90, 100 pips, 100 points. Obviously it depends on the market and the expected range and stuff, but if you're up that kind of amount, then you've got to be prepared to give a lot of that back to look for the 300 point day. But as you're kind of going to 200, 250 points, then obviously you don't want to give it all back for the sake of the last 30 minutes that might just give you an extra 50, 60 points. So you've got to have your flexible with your stop width at the beginning. Sometimes be prepared to give back everything. It does sound stupid, but often if you're up that amount, you don't really want to be tightening things up, because ultimately it might just kind of rotate back, or it might extend and then rotate back. And you know, you've got to, under normal circumstances, you might be a little bit more strict and a little bit more aggressive with your exit. Trend day a bit more flexible, only because of the potential gain that you can get. Fourth thing, guys, is don't try and be clever. What I mean by this is it's tempting to kind of job it in and out. Now, there's nothing wrong, I don't think, with adding and scalping around a core, but leaving that core and not scalping on the short side. So some people might disagree with me on this, and that's fine. But I think if you've got a core position, then you can keep that and leave that. And if you're gonna scalp around it, you're like looking for pullbacks, scalping from pullback to fresh high, that kind of stuff. And that really just goes in a kind of a different pot, so to speak, but you leave the initial trend position in. What you don't try and do is say, oh, that's a bit extended now. What I'll do is I'll close it and I'll go back in lower, because that's very hard to do. You're better off trying to sit through it. Now, for me, the fifth one comes in, guys. If it ticks all the boxes, you've got to just walk away. You know, for me, if I think I'm on a trend day, the best thing that I can do is to put that position on, put the stop in, have times of the day when I will look and I will check price action. If it's come back and it stopped me, so be it. If something's come out on Twitter and spiked it, so be it, I've been stopped out. But at least I can see what's happened. And maybe then I can look and say, right, well, actually, at this time, which is a normal reversal time, we've actually held pretty good. That's great. This time we normally get a reversal. Oh, the price action is not so good here. Where can I move the stop to? How can I amend it? But I really don't want to be watching price action. Now, some people might be able to sit there and scalp it and still have a core position. And that's great. If you can do that, that's fantastic, because you're making double whammy, if you like. But the priority for me is to make sure that I'm in the trend and I'm staying with the trend. So you can do stuff like having a very wide trailer. You know, that will just keep you in the trend, and you know that at least you're protected. You can say, right, I've got a 80-point trailer, whatever. Now I'm going to put it in, because now we're kind of in chug mode. We've had the initial volatility maybe. Now I can put my trailing stop in and leave it. And if we kind of move up, it's just going to go up with it. Maybe I can be a bit tighter than 80 points, obviously, depending on what you're trading. And use a market on close order. So I can either come back just before the close, exit, or I can use a market on close and forget, and then just see. Obviously, these will have to be one cancels the other, but then I can just see what price I got filled at. I think that that's really the trick, guys. And okay, it's all very much personal thing as well with everything with trading, but it's very much the trick that if you think that it's a trend day, and you think it's got all the attributes, and you think it's likely to be a trend day, it's time to commit. However that's committing to you. Maybe that is just putting a stop at your level or moving it to break even at some point when you get a decent cushion and going, hey, that's it, I'm going to literally go, it's going to be a trend day or it's not. I'm not going to try and be clever. I'm not going to try and manage this thing. I'm not going to try and pick the high. I'm going to literally close it at the close or my stop, and that's it. And make the decision whether you do that or you manage it or whatever, and stick to it. If it's a hybrid of the two or one or the other, then stick with it, because you know these are the times when you can get really, really monster moves. And sometimes you come back in, it's like been a 300-point day and you've caught a big chunk of it. There's nothing better, because you've literally said, hey, it's got the attributes, I'm going to do it. And sometimes it will go your favor and come all the way back, and you've been stopped out and it's not been that great. You've kind of made 50 points and it was up 200 or something, but that's the way you've had to manage it, because you've wanted not to be there, not wanted to meddle with it. If you meddle with it, you'd have taken it out at plus 100 anyway, etc. So something to think about, guys, capturing those trend days. Let me know your thoughts on that. Let me know how you capture those big trend days. Are you even bothered? Maybe your strategy is not to even bother with trend days, just to stay and try and scout little moves. Maybe you kind of think, well, a trend days, all I want to do is stay out of trouble, because I'm really always trying to trade counter trend. And that's another thing, guys. Often many traders, very good at counter trend, mean reversion type stuff. And so when a trend day comes, they get run over because they're constantly trying to sell the highs. So I think this is a good, useful tool to be able to predict, or you never can predict, but at least have a good idea if it's going to be a trend day, to at least stay out of trouble. Number one, if you capture it, even better. All right, guys, take care, keep risk managing whatever you're trading, and I'll see you in the next one. Bye-bye.